in cost control and management accounting. Become 6th semester subject. So now discuss about question paper pattern. Right? Total marks 100 marks, 20 marks internal marks, and 80 marks theory exam, external theory exam. So question paper contains divided in two parts, part A and part B. In part A, given 8 questions. Okay, 1 questions from each unit. So out of 8 questions, you must attempt the 5 questions. Each question carries 4 marks. 5 into 4 marks, 20 marks. Next to part B. 2 questions given each unit. Each question carries 12 marks. Right? 5 into 12 marks, 60 marks. Right? Total 80 marks question paper. In part B, each unit given 2 questions. 1 question is alternative choice. Right? Now, going to important questions. Unit 1. Right? Unit 1 chapter is marginal costing. Right? So, in previous question papers, frequently asked in each unit, one question related to theory question and another question will be problematic questions. Right? First of all, we have to discuss about the theory questions. Right? Unit 1 theory questions, you must read the 2 or 3 questions. Right? First question is define management accounting and explain functions and objectives. Right? Simple question. What is the management accounting? Management accounting is a process of identifying, measuring, interpreting the and communicating the business information to the management for the planning and decision making and make a in business decisions and achieve the business goals. Right? This is a definition. So what are the functions of business? Management accounting, planning, right? Stopping, directing, controlling, organizing, and data collection, and analyzing the data and interpreting the data. So those are all functions, right? Next one, objectives. So management accounting objectives. First one is assisting the planning. Second one is controlling the business operations. Third one is performing the evaluation, and next one the controlling the business operations and coordinate among the different departments, right, and improve the efficiency and coordinate between the staff and profit maximizations. So simple question. So you must read this question: management account, define management accounting and explain objectives and functions. Second question is, this is also important questions, previous question paper. Okay, frequently asked this question. So define management accounting and explain differences between the financial accounting and management accounting. Right? This is the second question. Right? Third question is define management accounting and explain advantages and disadvantages of the management accounting. Right? Dear students, okay, you must read these 3 questions. Right? Second, alternative question will be there. Alternative question given related to problematic question. Right? So we will take the one problem. Okay, in the marginal costing. Right? So listen carefully, ma. So here, first problematic question in marginal costing. The sales turnover and profit of a company during the 2 years was as follows. Right? Here given the 2 years. 2 years 1991, 1992, 1991 sales 1,50,000, 1992 sales 1,70,000, profits 1991 profit 20,000, 1992 profit 25,000. So here you are required to calculate the PV ratio. Second one is BEP. BEP means break even point. Third one is sales required to earn profit of 40,000. Fourth one is profit made when sales are 2,50,000. Fifth one is margin of safety. Right? So this type of question, okay, previously frequently asked in examination. So this is the most important problem. So listen carefully. So first one is calculate PV ratio. So all of you remember the formulas. Okay, formulas most important in marginal costing. So here remember the marginal costing equation, right? S minus E is equal to F plus P, right? S refers to sales. Sales minus variable cost is equal to fixed cost plus profit. So first of all, we have to calculate, find out the PV ratio, right? So here given the details about the sales, 2 years sales and 2 years profit, right? Actually, PV ratio is equal, what is the formula? Contribution by sales into 100. But here we write the another formula. PV ratio is equal to change in profit by change in sales into 100. Okay, this is a PV ratio formula. Change in profit by change in sales into 100. Right? So PV ratio is equal to, okay, substitute these values in this formula. So last year 1991 profit 20,000, 1992 current year profit is 25,000. Right? Change in profit 25,000 minus 20,000 divided by change in sales. 1992 sales 1,70,000 minus 1,50,000 into 100 is equal to 25,000 minus 20,000, 5,000 divided by 1,70,000 minus 1,50,000, 20,000 into 100. 20 cancel, 20 cancel. Okay, 225 is a 50. So PV ratio is equal 25%. Okay, complete the first one, right? Second one is BEP. You know BEP, break even point. In this point, total revenue is equal to total expenses. So in this point, no profit and no loss. It refers to the BEP, right? So here BEP is equal what is the formula? Fixed cost divided by contribution into sales. This is the BEP formula. Fixed cost by contribution into sales, right? So in this details, not given the any fixed cost and any contribution. So we have to find out the firstly fixed cost and then find out the contribution. So PV ratio is equal, actually formula contribution divided by sales into 100, right? So here already we have to find the PV ratio. PV ratio is equal 25%. So 25% is equal contribution. Okay, contribution not given. So contribution C for contribution divided by sales. So we have to take the current year 1992 sales 1,70,000 into 100. Right? Two zeros cancel. Okay, let's do the cross multiplication. Right? 25 into 1,700 is equals contribution. Right? 25 into 1,700 is equals 42,500 contribution. Right? Contribution is equal 42,500. Then find out the fixed cost. Right? Here, see this equation, sales minus variable cost is equal fixed cost plus profit. Right? Sales minus variable cost is equal contribution. Right? Contribution is equal, what is the formula? Fixed cost plus profit. Contribution is equal fixed cost plus profit. Right? Contribution is equal fixed cost plus profit. So your contribution is equal 42,500 is equal fixed cost, F for fixed cost plus profit. Okay, you have to take the current year profit 25,000. Right? So 42,500 is equal fixed cost plus 25,000. So 25,000 take and send in this side, 42,500. Okay, plus becomes minus plus 25,000 minus 25,000 is equal fixed cost. Right? Therefore, fixed cost is equal 42,500 minus 25,000 is equal 17,500. Fixed cost is equal 17,500. So this values substitute in the BEP formula. That BEP is equal fixed cost by contribution into sales. So here BEP is equal fixed cost is equal 17,500 divided by contribution is equal 42,500 into sales is equal current year sales 1,70,000. Right? 17,500 divided by 42,500 into 1,70,000 is equal 70,000. Right? 70,000 is BEP sales. Right? So PV ratio completed BEP. Next, third one is sales required to earn profit of 40,000. Okay, in this situation, earned profit 40,000. So you have to find out the sales requirements. So we have to using the BEP formula. So sales requirement is equal fixed cost plus desired profit. Fixed cost plus desired profit divided by PV ratio. Right? So sales requirement is equal fixed cost plus desired profit divided by PV ratio. So here you know the fixed cost. Fixed cost is equal 17,500. Okay, desired profit is equal here 40,000. and PV ratio is equal 25%. Okay, 25% also write like this 0.25. So is equal 17,500 plus 40,000, 57,500 divided by 0.25. 57,500 divided by 0.25 is equal 2,30,000 is sales. 2,30,000 is sales. Right? Okay. This is the marginal costing problem. Right? So this type of problem, previous question paper, frequently asked so many times. So dear students, so remember this formulas, mainly PV ratio. PV ratio is called, what is the formula? Actually, contribution by sales into 100. Another formula is changes in profit by changes in sales into 100. Next, BEP is equal fixed cost by contribution into sales. Another formula, BEP is equal fixed cost by, you have to using the PV ratio also. Right? Next, sales required to earned profit 40,000. So in these situations, we have to using this formula. BEP is equal, sales requirement is equal fixed cost plus desired profit divided by PV ratio. Right? Next, now going to second unit. Second unit, in the second unit, two chapters are there. First chapter is budgetary control, budgets and budgetary control. Second chapter is standard costing. Right? In this unit, two questions, given the two questions, one question is related to theory question, second question, another question will be problematic question. Right? So first of all, discuss about the theory questions in budgets and budgetary control. Right? So dear students, you have to must read the two theory questions. Enough? So what is the theory questions? First question is define budgetary control and explain objectives. Define budgetary control and explain objectives. Right? So budgetary control is a system controlling the costs and any business operations. Okay, preparing the budgets and comparison the actual performance and budgeted performance. We have to find out the differences. Differences means deviations, variations. So this budgetary control is vital role in business decisions. So this is the definition and objectives. What is the objectives? First one, planning of business activities. Second one is coordination among the different departments. Third one is profit maximization. Next one is decision making and motivation into the employees and utilization human and other resources. Right? Next, second question, second theory questions. Second theory question, define budgetary control and explain the advantages and disadvantages of budgetary control. Right? So, what is the advantages? First one is proper planning. Right? Second one is better coordination. Next, cost control, performance evaluation and helping decision making and proper profit maximization and improve the communications and detention the any problems. So these two questions is most important. So compulsory one question given into the exam. right? Another question is related to problem. Okay, problematic question given in the standard costing, right? One problem. Okay, discuss about one problem in standard costing. Okay, see this problem. From the following information, calculate first one, material cost variance, second one, material price variance, third one, material usage variance. Right? Here given two types of materials. Okay, material X and material Y. Here standard quantity and standard price, actual quantity and actual price. Right? Standard quantity 10 units, 15 units. Standard price 4 rupees, 5 rupees, 12 units, 18 units, 3.75 paisa, 4.50 paisa. So what is the standard costing? Standard costing is a technique. You know here, cost accounting, costing methods and divided in costing methods and costing techniques. Costing methods helping in the ascertain the prices, cost of the any productions like that unit, cost of unit and total cost of the productions. Okay, determination the production cost. So here different costing methods are there. Batch costing, multiple costing, operative costing, process costing, contract costing, right? And absorption costing. Okay, different costing methods are there. But costing techniques, there are two types of costing techniques. First one is marginal costing. Second one is standard costing. So what is the standard costing? Standard costing refers to the, okay, find out the variation between the actual cost and standard cost. Right? Variation means differences between the actual cost and the standard cost. So in this standard costing, you have to expect and estimate the different methods. Okay, material cost, okay, material variations and labor variations and overhead variations. Right? In exam point of view, so we have to discuss about the material variances. Right? So here we take the one problem. So from the following information, calculate material cost variance. Material cost variance means MCV. Okay, in shortcut MCV. Material price variance means MPV. Right? Material usage variance is MUV. This is also MUV is also known that MQV, material quantity variance. Right? So one by one, find out the, okay, different variances. First one is MCV. You know MCV? MCV means simple problem. Okay, compulsory question in the exam. Okay, so MCV is equal material cost variance. Material cost variance is equal, what's the formula? SQ into SP minus AQ into AP. No? SQ means SQ stands for standard quantity, SP is equal standard price. AQ is equal actual quantity, AP is equal actual price. So MCV is equal SQ into SP minus AQ into AP. So you are given the two types of materials. So you have to find out the separator. Okay, material X and material Y. Right? First one, material X material. Right? So MCV is equal. Okay, substitute these values in this formula. SP is equal 10. SQ is equal 10 and SP is equal 4 minus actual quantity is equal 12 into actual price is equal 3.75. Right? 10 into 4, 40 minus 12 into 3.75 is equal 45. Right? Here minus 5. So here variations two types now. Favorable variances and unfavorable variances. Okay, favorable variance means standard quantity exceed, standard results exceed in compare with the actual results. So this is a favorable. Okay, favorable variance denoted by the F. F refers to favorable and unfavorable, okay, denoted by the A. Okay, A stands for adverse. Adverse means unfavorable. So this is minus 5. This is unfavorable. So you have to write in bracket A. A means adverse. Right? Next one. Material price variance. Right? Material price variance is equal to AQ into SP minus AP. Material price variance is equal to AQ into SP minus AP. Actual quantity into standard price minus actual price. Right? Actual quantity is equal to 12 units. Standard price is equal to 4 rupees and actual price is equal 3.75 paisa is equal to 12 into 4 minus 3.75 is equal 0.25. Right? 12 into 0.25, 3. This is favorable. Okay? This is favorable. Right? Next one is MUV. MUV means material usage variance. Formula is SP into SQ minus AQ. SP into SQ minus AQ. Okay, standard price into standard quantity minus actual quantity. Right? SP is equal 4 rupees. SQ is equal 10 units. AQ is equal 20 units. So 4, 10 minus 12 minus 2 is equals 8. This is adverse. So completed the X material variances. MCV, MPV, MU. So as usual, find out the Y materials. Right? Y material. MCV is equal, what's the formula? SQ into SP minus AQ into AP. Right? 15 units into 5 rupees minus 18 into 4 rupees 50 paisa. 15 into 5, 75 rupees. 18 into 4.5, 81. 75 minus 81 minus 6. This is adverse. Minus 6. This is adverse. Unfavorable result. Unfavorable variance. Next, MPV, material price variance. Material price variance is called, what is the formula? Actual quantity into standard price minus actual price. Okay. So, see the Y material now. AQ is equal to 18 units into SP 5 rupees minus 4.50 paisa is equal to 18 into 0.50 paisa is equal to 9. This is favorable variance, right? Next one is MUV. MUV is equal to SP, standard price, into standard quantity minus actual quantity. Okay, material Y, standard price is equal to 5 rupees, standard quantity 15 units minus actual quantity 18 units is equal to minus 3. So here result is adverse, unfavorable variance. So this is most important problem, compulsory given the exam. So remember this formulas na. MCV, material cost variance. What's the formula? SQ into SP minus AQ into AP. Okay. Next, MPV is equal actual quantity into standard price minus actual price. Okay. Material usage variance is equal standard price into standard quantity minus actual quantity. Right. So second unit is also completed. Then now going to third unit. Right. Right. In third unit, included two chapters. First chapter is financial statements. Second chapter is ratio analysis. Ratio analysis. Okay. One question given from the financial statements chapter. Another question given from the ratio analysis chapter. Right. One question related to theory question. Another question will be problematic question. Right. So you must read in financial statements theory question. What is define? Define financial statement and explain importance. Importance means advantages and disadvantages of the financial account. Simple man. Okay, you know about the financial statements. Already you learned in previous classes. Okay, semester 1, semester 2 also. Okay, what is the financial statements? Financial statements is a prepared in different processes like the trading account and profit and loss account and balance sheet and cash flow statements. Okay, those are proper books, right? So what is the importance of the financial statements? Okay, simple. We know the profitability about the any business concerns in a particular period of time. Okay, second one is we know the financial position of the any business concerns and facilitate to comparison, right? And evidence to the any legal issues like that, any legal cases. Okay, and facilitate to the helpful to the tax liability, and facilitate to comparison. Comparison means, okay, comparison between the statements, financial statements, results between the different departments and one company to another organizations. Okay, and finalize the in situation of the winding of the any organizations. Okay, admission of the partner, retirement of the partner, and death of the partner, and dissolution of the any partnership forms. Okay, in these situations we have to using the financial statement reports, right? Simple question. Okay, compulsory. You can read this financial statement, one theory question. Next one is ratio analysis. Okay, in ratio analysis, two important questions are there. First question is define ratios and explain the objectives and importance of the ratio analysis. Right? Another question is define ratios and explain the different types of ratios, classification of ratios. Right? Ratios classified in different types. Okay, actually ratios classified four types. Liquidity ratios, second one leverages ratios, third one is turnover ratios, fourth one is profitability ratios. Right? So here liquidity ratios subdivided in different types. For example, current ratios, liquidity ratios, okay, quick ratios, absolute quick ratios. Right? Leverages ratios is also known that structure. Okay, capital structure ratios. So this subdivided in different types. First one is debt equity ratio, proprietary ratio, and interest coverage ratio, dividend coverage ratios, and fixed assets ratios, and capital gearing ratios. Right? So you can write explain about this different ratios. Right? What is the current ratio? What is the quick ratio? What is the absolute quick ratio? What is the debt equity ratio? What is the capital gearing ratio? What is the proprietary ratio? Like next one, turnover ratios. Turnover ratios compare with related into the sales. Sales are cost of goods sold. So here subdivided in different ratios. Stock turnover ratios, debtor turnover ratios, creditor turnover ratios, fixed asset turnover ratios, total assets turnover ratios. Right? Next one is profitability ratios. So this is the most important profitability ratios. So in problematic question given from this profitability ratios. Okay, these ratios subdivided in different types. First one is most important, gross profit ratio. Okay, compulsory question, problematic question. Okay, given from the ratio analysis, profitability ratio. First one is gross profit ratio. Gross profit ratio is equal to formula gross profit divided by net sales into 100. Second one is net profit ratio. Second one is net profit ratio. Net profit ratio is equal to net profit divided by net sales into 100. Right? Third one is operating ratio. Operating ratio formula is operating cost divided by net sales into 100. Next one, operating profit ratio. Operating profit ratio is equal to formula operating profit divided by net sales into 100. Okay, this is the most important formulas in the ratio analysis, right? So third unit is also completed. Next one, fourth unit. Fourth unit, funds flow statements. Funds flow statements. Okay, only one chapter ma in fourth unit. So in this unit also given two questions, long questions. One question related to theory question, another question is problematic question. Okay, what is the theory question? So here you must read the two questions. Okay, I will give the two questions. First question is define funds flow statements and explain the objectives and importance. Compulsory question. So what is the funds flow statement? Funds flow statement is a financial statements. So we have to find out the flowing. We have to find out the flowing. Okay. How to collect the funds from the different sources, and those funds how to allotted, how to use this funds. So funds inflow for funds outflow is called funds flow statements. Funds inflow, funds outflow. Right? So importance of the funds flow statement simple. We have to analyze the financial position of the any particular business concerns, business organizations. First one is analyze the financial position. Second one is analyze changes in working capital. Okay. Third one is mutualized and evaluate the sources and uses. Okay, evaluate between the sources and uses of the funds. Third one is evaluate the financial investments and make a helpful in the decision making. Right? This is the importance of the funds flow statements. Right? Second theory question is simple mark differences between distinction between the funds flow statements and cash flow statements. So you must read the two questions now. Okay, what is funds flow statement and explain the objectives and importance. Second question is distinction between the funds flow statement and cash flow statement. Okay, one theory question compulsory. Another question will be related to problematic. Right? Then fifth and the last unit, cash flow statements. Cash flow statements. Okay, this is also same compare with the fourth unit. Okay, one question related to short theory question, another question will be problematic question. Three questions, you can read the two questions. First question is define cash flow statements and explain the objectives and importance of the cash flow statement. Second question is differences between funds flow statements and cash flow statements. Right? And I will give in these short questions, ma. Okay? Remember these questions. Unit 1, define cost control. Second question, define cost reduction. Third question, decision making. Fourth question, marginal costing. Fifth question, BEP. Sixth question, PV ratio. Seventh question, margin of safety. Right? In second unit, short questions, define standard cost. Second question, define variance. Third question, define idle time. And the fourth question, master budgets. And the fifth question, define budgets. And the fourth unit, third unit, short questions, comparative statement, trend analysis, common size statements, and liquidity ratio and current ratio. Right? In fourth unit, short questions. Define funds flow statement. What is working capital? Simple ma compulsory question. Working capital question. Okay, define working capital. Simple. Working capital is equal current assets minus current liabilities. Right? Next one. Define sources of funds. What are the current assets? Define flow of funds. In the last 15 minutes, short questions. Define cash flow statement. What is cash flow? Define operating activities and define financial activities. Okay. In second unit, one more question. Okay, sometime ask you this question, define budgets and explain different types of budgets. Okay, simple question. So budgets classified in different types according to different criteria, the different regions. Okay, like that budgets classified according to the conditions. Okay, as per conditions, two types of budgets: current budgets and master budgets. And classification according to the flexible. So according to this flexible, so two types of budgets. Okay, fixed budgets and flexible budgets, cash budgets and master budgets. Okay, and long-term budgets, classification according to the period. So according to these three types of budgets, three or four types of budgets: long-term budgets, short-term budgets, interim budgets, and current budgets. So this question is also must be read. Okay. Okay, dear students. Thank you. For more details, follow the Rupesh Degree College. Okay. Thank you.